All right, guys, let's now bring in Ian King, Senior Research Analyst at research firm Banyan Hill. Ian, great to have you here with us today.
Thanks for having me, guys.
Absolutely. All right, Ian, what's your take on the moves in the cryptocurrency market this week?
Well, this week in particular, obviously we're seeing a lot of selling, and I think you need to put yourself in the perspective of someone who invested in crypto in the last 6 months.
Okay.
Most of these investors that came in late to the game, November, December, underwater, so now they're going through different mental jujitsus in their head. You know, first is, I had an account, maybe I put $1,000 or $2,000 in, I saw the price rise, and I've got $5,000 now. Next week it's $4,000. I'll just wait till it gets back to $5,000. The following week it's $3,000. And so you're consistently seeing these declines, and you see a rise in hope in the markets, but not an actual rise in the market. So I think that's going to keep prices down for the foreseeable future in the crypto market.
Well, speaking of downward pressure on prices, Bitcoin now on the BRTI chart that I'm looking at on TradeStation's platform at 73.67 right now. Look, nobody knows the future of these cryptocurrencies, especially in terms of pricing, but how do you think people are treating this? Are they treating Bitcoin and other cryptocurrencies, are they treating this like an asset to hold on to and to invest in? Or are people treating it as it's actually going to be the currency of the future?
Yeah, you know, if you think about how Bitcoin came about, you had central banks with global coordinated quantitative easing, and usually when central banks raise or lower rates to zero, you get all these speculative assets. We went so far just to create an entire new currency. So you haven't seen the kind of adoption that you're looking for. You haven't seen it as a vehicle of payment, but I think more speculators treating it as a store of value rather than anything else.
If you're somebody that got in, you mentioned we've got to put ourselves in the shoes of people who have gotten into cryptocurrency in the past 6 months. But if you are somebody that got in at the height of the crypto craze and when all of these prices were soaring, how do you play this now, especially considering the sell-off that we've seen, especially considering the declines that we're noting right here today?
So no matter what asset you're trading, you're never really trading the asset, you're trading your own beliefs about that asset. So if you think about it, no one believed that Bitcoin could go to 20,000 last year. I think the highest bullish expectations were for maybe at $10,000 at the end of the year, and this is dating back this summer. We hit 20,000, and then immediately everybody says, okay, we're going to 50,000, we're going 100,000. And you just saw this rush to get in, coinciding with the futures market coming about. And the narrative also that institutions were coming, we're going to drive the price up. So I think a lot of people kind of got caught on the wrong side of this trade, and you know, for a lot of millennials that have gotten into crypto late, they're experiencing their first bear market. Now, look, experiencing a bear market is a good experience if you can learn from it. Like, you have to take and understand, you know, what you're going through right now, what kind of emotions you're feeling, and remember them the next time you're caught in some type of investment like this.
Ian, to what extent do you think the banning of cryptocurrency ads or ads related to ICOs have had, you know, we've had news that, of course, Twitter, Snap, Facebook, Google, they're all cracking down on these types of ads in order to protect consumers. That's what they say, at least. To what extent do you think that has an impact on the downward pressure on Bitcoin and other cryptocurrencies as well?
So obviously it has some impact, but I think, you know, the bigger story is it hurts Ethereum more, because if you think about what demand for Ethereum comes from all these utility tokens that were produced in the last year, and it's easy to do utility token. There's videos online you can watch for 15 minutes how to create your ERC20 standard token, and then you'd have to figure out a way to market that. So if you spend enough on social media and get a big enough following, then you can launch a utility token.
Ethereum, you're saying it hits the most?
On Ethereum.
Wow, okay, yeah, and we have a chart pulled up of Ethereum. The price right now, today for Ethereum, 396, according to the chart we're looking at on TradeStation, down more than 11% right now.
And you're also seeing like projects that priced last year that took Ethereum in above 500, they're now selling because they want to liquidate that so they have cash to actually run their business. So I think that is also adding more downward pressure on Ethereum.
How are they required to then, if they're reporting that cash that they've been able to bring in on the crypto trades that they have done and getting out of some of those positions, what's the reporting requirements for them?
Well, I mean, most of them are SEC regulated, right? They're not considered public companies, so there are no reporting requirements.
Okay.
But there is data on what they have.
We're unfortunately going to have to leave things there. Ian, thank you so much for joining us on Cheddar today. It's great to have you. Ian King, Senior Research Analyst at the research firm Banyan Hill. Thanks, Ian.